Hi everybody, welcome back to the channel. Thought I'd keep things brief tonight, and we're talking about three mining stocks that all pay dividends. So one thing that is a theme of this channel is to talk about companies that pay dividends, to talk about cash flow opportunities. We talk about various ETFs that pay dividends, but the goal is to create a portfolio that is constantly spitting out cash flow. And when it comes to retirement and those sorts of things, we can look at stocks that are in the mining sector that also might provide a hedge to inflation, especially when it comes to copper mining. We have Rio Tinto. That's the first one we're going to talk about. And this one, I made a video on this yesterday. This is one that I've done a bit of research on. It's an internationally based mining company. And as you can see, they pay a dividend right now. It says 6.55%, but depending on the source, as you can see, it says 7.77% on NASDAQ.com. But this company has been very consistent in terms of making those dividend payouts. So I love seeing the consistency over the last several years where they have been making those payouts. Now, it is a little bit wonky in terms of the payout schedule, as you can see here, and I mentioned this in the last video. But with that being said, keep in mind Rio Tinto is one that, like I said, it's an international mining company. They're not just focused on silver or gold, but they're also focused on copper. They're focused on those base mineral productions, and they are a very large company, internationally based, market cap of $83.2 billion. So you have that well-established mining company that's spitting out large dividends to shareholders, and they've been doing so for quite some time. So that brings us to our next large internationally established mining company, and that's Newmont Mining. And I've talked about this one on the channel as well, but this one sits currently at a $49.12 billion market cap. And of course, you'll want to research these companies more in depth and figure out if these might be something that falls in line with your risk tolerance and your investing goals. But this one pays a dividend right now of roughly 3%, it says, over the last trailing 12 months. But the yield right now is $1 per share, 2.35% according to finviz.com. We can jump on over to NASDAQ.com and see that that's pretty much going to be accurate in this case, 2.37%. That annual dividend was cut from 40 cents per share down to 25 cents per share. So always keep in mind that these dividends can fluctuate, especially with these mining stocks, and they tend to be more volatile in nature for that reason. Gold prices are going to be more volatile than some of the other types of assets and markets out there. You have a real estate investment trust that maybe has been paying dividends for a while, but it's going to be a different type of market than the commodities market, which is highly volatile, and there's a lot of factors going on. So keeping that in mind, you have to really look at the specifics of the companies. Based upon the research I've done, I think these are all solid companies, but like I said, always do your own research and make sure you're looking at these companies from your own investing goals and your risk tolerance. So although Newmont has cut its dividend, you can see that they really do have a consistent history of paying dividends, and they have paid these dividends for several years, as you'll see, going even back to 2012, 2010, 2017, just going all the way back there. You'll see that they've always paid out those dividends, and so that's one thing to look for in a company, especially if you're looking for that long-term cash flow and you're trying to get those dividends on a consistent basis. Even if you do see some differing amounts in terms of those cuts, see some variable amounts. Like, for example, even with Rio Tinto, these dividends are not very consistent. You have a dividend that's paid out at $1.77, $2.58, but the goal is that long-term cash flow, and hopefully over the long term, that cash flow goes up over time to keep up with inflation and those sorts of things. But with that being said, we have the third company now I'd like to talk about, and that is B2Gold Corp. So once again, just like Newmont Mining, this will be focused on silver and gold. This is going to be a smaller player at $3.64 billion. But one thing I do like about this is that they are very consistent in terms of these dividends, and they have not let up one bit, even though they haven't raised the dividend since 2020. You'll see here, even going back to 2021, they've paid a 4-cent dividend per share. So a consistent 16-cent dividend, and that has remained for several years. Now, it'll be interesting to see if this company can actually pull off a dividend increase here, which I think would bode well for the company. But keeping that in mind, even though gold prices are up, just because gold prices are going up does not mean these mining companies are necessarily going to remain profitable. They have a lot of operating expenses and costs, so that's always something to look at. Same with Rio Tinto. It's a large international mining company, but there's always those various costs and factors to consider. And so if we look at the gold price right now, we can see that we're trading at about 2,300, But at the same time, this is at an all-time high, so you would expect these mining companies perhaps to be paying record dividends, but that's not necessarily the case. Even though it can act as a hedge towards inflation in the long term, it does sometimes take a while for these trends to play out, especially when, the price of gold was just trading at $1,600 back in late 2022. So now we're finally breaking out to the upside, and now we might have a lag effect in terms of some of these earnings that we'll see in these mining companies in the coming quarters, where perhaps things start to improve. And, as you can see, we've kind of been trading down here, for example, for B2G, in a lower end of the range than what we've traded at previously. I know this stock has previously hit $6 or $7 per share, especially when gold has gone on a bull market, and silver has as well. So it'll be interesting to see how these earnings fare when it comes to these mining stocks, especially as the lag effect kind of takes place and we start to see these earnings come in and how that will play out. So with that being said, these are 3 stocks to consider. Once again, on this channel, we talk about cash flow, we talk about dividends, and that's why I love to discuss these topics. So consider these companies. Once again, Rio Tinto, ticker symbol RIO, also Newmont Mining, NEM, and then we have B2G, or BTG is the ticker symbol for that third one we talked about. And one more thing about this one is that it does pay a 6% dividend yield. Not necessarily the most important thing in the world, especially when it comes to whether you're looking for that long-term dividend appreciation or, that initial yield. So it really comes down to your specific goals. But at the same time, that Rio also pays a nice dividend yield of 7.77%. So I don't want to say that dividend yield is like the most important thing to focus on, but of course, seeing that nice initial yield can attract some investors into considering these stocks versus like Newmont, for example, which only pays right now a 2.37% yield. So with that being said, these are 3 stocks to consider, guys. Thanks so much for tuning in to this video, and we'll see you guys in the next one. Take care.